So what kept me playing was I love hockey. I love playing. It was the passion. It wasn't like I wanted to climb the ladder. I knew I wasn't going to climb the ladder. I just loved playing. And I know that there was only a short amount of time in my life that I would be able to have the freedom to do this, have the health to do it at that level. So I knew, like, having the foresight to know that, hey, this is going to end at some point and I'm not going to be able to do this. So let's take advantage of the time that I have.
We're live right now. We have a kick-ass episode today. We got Zane Schartz with us today. We got Tom Mealy. Before we jump in, obviously today we're extremely excited. Zane has an incredible resume, not only a hockey resume, but he's also playing a little bit, which we will get into. But in the commercial side, he has his own units. He creates funds. He's got an incredible company, which again we will get into. But Tom Mealy, why do we do this?
Why do we do this? We do this to give back, Bob. Zane, thank you so much. Incredible resume, both hockey and real estate related. But, at the end of the day, like you just said, hockey is, towards the end of your career, it is a men's league. You're jumping in a few games. It's keeping you active. You're staying in shape. That's great. But at the end of the day, it does come to an end. And, the quote unquote of real life needs to kick in and you got to do something to, support your family and pay the bills. So, the reason we created this is to, give back to the game. Obviously, we want to stay involved. We want to talk to guys that are doing business that we're doing in different markets, but also create a platform for when guys are on the verge of making the next step. Maybe they could reach out to, myself, Bob, guys that they've seen on this show in different markets all over the country and kind of utilize that space and that platform. So that is why we do this.
Very good, very good. All right, before we start, this is brought to you by Riva Global, which is a premier virtual assistant staffing company and also our real estate arm of Perch Rock here in Cheshire, Connecticut. So let's get rocking and rolling. Enough BSing. Zane, thanks for jumping on. You went to Liberty. You've played professional for a long time. You've been in the commercial space, I think, for over 7 years. So give us a snapshot of a little of your background and how you got here, because it is packed full of exciting stuff that everybody's going to take a lot out of. Take it away.
Thanks for having me on. I appreciate it. It's a great reason to do it. I love hearing people's whys. So I went to Liberty. I went there 2015 to 2018. I played in the ECHL before then. But I kind of knew that being at Liberty, it's club hockey. So I knew that I wasn't going to make enough money to make a living. And I knew that I wanted to get into real estate after. So throughout college, I did some internships in different real estate companies in Dallas. And the first one I did was a medical development firm out of Dallas, and they built medical office facilities. And then the second one I did was with a private equity group out of Dallas that acquired multifamily properties across the country. So I worked for them. Throughout college, I worked for them. They also owned a property management company, so I did pro formas for them. So not only was I learning the investment side, but I was also learning the asset management side and what to look for and really hone in my underwriting process. So then graduated from Liberty, and I went on to play in the ECHL for a couple seasons and in Europe for a bit. And throughout that too, I was doing not odd jobs, but still working for that private equity group. Doing all the analyzing and underwriting for multifamily assets. And then when COVID hit, I kind of realized, I was like, hey, it might be time to start the next chapter, turn the page a little bit. So I kind of retired, but kind of didn't. But, I was like, okay, now I'm going to come on full time in the real estate corporate world. And so that was about 4 years ago now. And at that time, the company I was at had $100 million of assets under management. And I ended up leaving them about 8 months ago. And at the time I left, they had $800 million of assets under management. So there's a ton of growth over that 4 years. Very fun, exciting time. Lots of acquisitions. I was in charge of all the multifamily underwriting acquisitions. And also we ran a triple net fund of tenants like Walgreens, CVS, Dollar General, tenants like that. So very cash flow driven. And then we also did development, ground up development, but I didn't do much with that. So did that stuff for about 4 years. And like I said, about 8-9 months ago, I was like, hey, the goal was never to work for anybody my whole life. The goal was to do this myself. So I kind of took the plunge, and with the blessing of the president of my old company, he said, go do it. We know this is what you've wanted to do. So kind of took the plunge, and here we are running my own fund. All my stuff. So the name of my company is Freedom Commercial Real Estate. And my goals are to help investors on their journey towards financial freedom. And I think a big part of financial freedom is cash flow. So every piece of real estate I buy is stabilized and cash flowing from day one. So that's kind of the reason behind what I do is I want to be the cash flow portion of an investor's portfolio. And then a cool thing that happened last fall as well is I put a group together. I've met with Zoyer Sports Group, who owns and manages a few other minor league pro teams, and they manage, I think, 4 to 5 other teams in the coast. And I've always wanted to own my own pro sports team. So I just reached out to them and I was like, hey, like, what does that look like? How do you do this? What's the process? I was really just calling to pick their brains, but I had a really good call with the president of the company. I was like, at the end of the call, I said, hey, I'm from Dallas and the Allen Americans are here. I was like, I want to buy them. And he was like, funny enough, so do we. So we ended up partnering together and put a group of investors together. And so now I'm an owner of a team in the coast as well, which is pretty cool and fun and exciting. Not super involved with that. I'm more of just an investor. Miles, Jack, and his mom, Lasagna, Jack, are the majority owners, and they've done a great job. So, but yeah, that's kind of between college and here. That's how I got here, and it's been a fun ride, and I'm excited for some
all right, there's a shit ton to unpack.
Holy fuck.
Yeah. So here's what I love to say. I mean, there's a lot of connection. We were just talking about Rob Murray, right? I played against him. He was a prick when I played against him. You guys are talking about as a coach. You said great coach, but obviously, Tom, you butted heads with him, but you say nothing but praise him. So that's what I say. The same thing as a player. He was a prick, but the utmost respect for him in the world. Tom, you had the same feedback. Zane, you played for him as well. You also played in Orlando. You played, look at your resume. You played everywhere. Where in Europe, though? It doesn't say on Hockey DB. Where in Europe did you play?
So I played in the Erste League in Hungary, and then I played in the 3rd League in Finland last year. So I played in Erste after – I played for 9 coast teams. I want to play for all of them. That's the goal. Play one game with every coast team. No, I'm kidding. So I played in Hungary and I played in Finland. And yeah, they were both good experiences.
So this is pretty important, obviously, to take away, because a lot of individuals that listen to this podcast are looking to the next chapter. You started your chapter while you were playing, which is really, really important. So what advice? So talk a little bit about that. I know you said at the beginning that you didn't see yourself making millions of dollars in the NHL. So you had, you saw that very early. So you started doing internships, right? Yeah. What kept you going back to play, and how the hell did that company that you're working with allow you to play, and what were you doing? Well, what was your job while you were playing with them? So explain that, because that's a question that, a lot of people will be thinking.
Yeah. So what kept me playing was I love hockey. I love playing. It was the passion. It wasn't like I wanted to climb the ladder. I knew I wasn't going to climb the ladder. I just loved playing. And I know that there was only a short amount of time in my life that I would be able to have the freedom to do this, have the health to do it at that level. So I knew, having the foresight to know that, hey, this is going to end at some point and I'm not going to be able to do this. So let's take advantage of the time that I have. And also, the hockey season is only 6 months, really 7 months. Working with that company, I was pretty much full time in those 5 months outside of it in Dallas in the office. And then during the season, I kind of proved that I could work remote and get everything done remotely. And thankfully in real estate, you can really work from anywhere. And if you're underwriting properties, all you need is the documents, and they're all spreadsheets, and just punching in numbers, talking to brokers, talking to lenders, talking to legal counsel on how deals can be structured differently. So really, I just worked remotely and then was on Zoom calls. Thankfully, with COVID, Zoom became a thing. So working remote became more normal and normalized. But so yeah, a lot of it was just analyzing properties from the ground up.
Very nice. So how did you get into that? Your first job when you took an internship? how did you know you want to get into the underwriting side of it? And explain a little bit what underwriting looks like in your worlds, because there's a lot of individuals that don't know what that means.
Sure. So underwriting, for lack of better terms, just analyzing a deal and getting the returns for investors from an investment standpoint, what their equity multiple is going to be, what their IRR is going to be, and how to do that, different levers to pull and maneuver from the investment side, from the operations side. Like, there's so many levers you can pull on multifamily deals. But your first question was, how did I kind of get there? And I was looking for an internship, and my dad literally just posted something on Facebook and said, "Hey, does anybody know of anything in the real estate world that would want an intern? Zane's looking for this summer." And my dad's friend was actually an investor at the private equity group that I worked at. And he said, "Hey, I'm an investor at this group. You should reach out to this guy. He's a good contact, and like, he may be looking." So I reached out to him, and he was just like, "Yeah, we're actually looking." And at that point, they only had 3 employees. So like, they were very small, and he just didn't have enough time to underwrite deals. So he taught me how to underwrite in a few weeks.
Nice.
And really honed my skill over that summer, and then just continuing to do deals throughout college and then after college. So just really refining and tuning my underwriting process was what allowed me to, I think, excel in the field.
Yeah. And that's great. Obviously, an internship, you had some mentors at a young age, right? In the summertime, that put some time into you, which is huge. Just curious, did the individuals that you work with, did they have any athletic backgrounds at all, or what were their backgrounds?
I think he played high school sports. So like, there wasn't a huge connection of like, hey, I played pro sports, or I played college sports, but he was a good guy. He worked out, he did CrossFit a lot. So like, he appreciated fitness and stuff, but yeah, I mean, it wasn't that big of a deal.
All right, so let's fast forward now. You started working for this private equity company. You learn a lot of different stuff. So let's go towards the end. When did you know you're like, shit, you know what? I want to stop working for somebody, and I want to put my balls on the line and start my own business? Because you just started 9 months ago, and what you do is you have to raise money on one side, and you have to find and acquire properties on the other that actually give a very good return. So there's a lot into that, and we'll talk more about that. But what was the deciding factor in what was your mindset to be able to do that and have the confidence that you'll succeed?
Sure. I read a book in college that Mark Cuban said, when you're young, you should get paid to learn. And I always told my boss at my old company, even from my very first internship, maybe even my first day, I said, "Hey, like, I don't want to work for anybody. That's not my end goal. My end goal is to do this myself, just so you know." So he knew that my end goal was always to do that. And I thought I was going to be there a lot shorter than I was. But I ended up being there for 4 years and was really getting paid to learn, which is what allowed me to catapult into doing my own thing. But probably about a year and a half ago, things just started going a little bit differently at that company, and we just started kind of having a little different visions for what we wanted at the company. So it was just time. I mean, that's just natural. I think it was his company, and I tried to be the best employee I could and help grow his company the way that he wanted. But at some point, you just want to, there's differences. And if they're big enough, and the end goal anyway was to work for yourself, it's like it became time. And it was time to go. So it all worked out, and here we are.
So you were always in your mind. So I was a lot like you. So when I first started, I worked with one individual with the idea of always wanting to start my own company. So, a lot of people want to work with a team. Other people want to work and own the company, right? And obviously build the team underneath them. So it's pretty interesting how you started looking at that. And I know, Tom, you probably have some questions on top of this topic. I have a laundry list of other questions, but you want to stick in this topic?
Yeah, I want to dive into just how did your I mean, I want to say boss, it's technically your boss, how did he react when he knew, when he brought you in, that you eventually, I hate to say it, were using him to kind of learn and then eventually go off on your own? Was that his business model in terms of, he loves training and he wants to basically then set guys free and let them go do their own thing? Or was he doing anything to incentivize you to kind of stay on and not lose you?
Yeah. So I'd say, like, definitely as time progressed, I became more of a partner than an employee. And so that's what kept me around as long as I did, and he really treated me well. So I have a lot of gratitude for that. I think he's an entrepreneur himself, so he knows that like he would never want to work for anybody. And I think he put himself in my shoes and was like, hey, he was treating me well, but also at some point, an entrepreneur is an entrepreneur. So at some point, they're just going to go and do it. Like that's in my blood. I want to do it. I want to run a team. I want to build a team. I want to build stuff myself. He did give me a lot of freedom at his company to basically be autonomous and grow my own company within his company, which was great. But I think that's where we kind of had some differences on how our vision for the future looked, and that was fine. And I think I hope he continues to succeed, and I hope that I do too. And so yeah.
Do you guys look at each other? Is he in the same market as you?
Yeah.
He's in Dallas. Okay. Do you guys look at each other as competition now, or would you like partner on stuff still? Like, how does that look?
I think in a sense we're competition. We do some of the same stuff, but I wanted to tweak what he did and kind of see the things that I liked in what he wanted to do and the things that I didn't like, and kind of turn those into something that investors may want that's different. So for example, a lot of his stuff was value add multifamily plays. So from like D class to C class, or C class to B class plays, where you would go in, buy a property, put 10K into each door and increase valuation through that. My model is going to be more buy stabilized assets, A plus markets, A class properties, and A class markets that are stabilized and cash flowing from day one. So more yield plays. So in a sense, they're competition. But in a sense, they're also not. Like, we're not going to be doing huge lift value add plays that he had done in the past. Also, he does a lot of office conversions from office space to multifamily, and I was just never really on board with that. I didn't have the same vision that he did on that. But so if I do get into development, it would just be ground up A-class multifamily. So, I mean, in a sense, like all real estate is really competition on the private equity side. You're trying to get investors money, and it's really up to them to make the decision of what they want. Do they want higher risk, higher reward, or do they want lower risk, lower reward? And I like to say that my stuff is really kind of like the lower end of the risk of like, hey, I'm buying yield, A-class properties, multifamily, or I'm buying investment grade only tenants in the triple net space. So kind of like the slow and steady. Warren Buffett says he's more concerned about the return of his investment than the return on his investment. So that's kind of like the piece of an investor's puzzle that I wanted to create.
Yeah, it's just different. I mean, he likes doing value add. He likes rehabbing properties and bringing them up a class. And you like the long term. That makes perfect sense. Tom, what else you got on that topic? You're on mute.
I said I had a couple questions before that, but I want to step back and kind of analyze what he just said. As far as like an A plus or an A class asset, how are you buying these? If let's call it what it is. A plus assets are probably in better areas. You're dealing with a more educated seller. So are you buying these? Like, where are you getting these leads from to actually prospect and turn this into a cash flowing asset? If you're paying a premium, are you paying a premium, or are you getting A plus at a discount? Is my question.
Sure. First question is, where do I source them? Basically, my time, the past 6 or 7 years I've done this, I have a lot of relationships with a lot of brokers, and they know that I perform. I'm not a BSer. I either say yes or no, and here's why yes, here's why no. So I think that carries a lot of weight, and that I deliver on what I say. I think as athletes, we all kind of do that, or most of us aren't BS guys. So I think that is where I source most of my deals. So if I want to say, hey, I'm looking for an A-class deal in these markets, a lot of people will send them to me, and they do. And then
you're buying off the MLS.
Not off the MLS.
You're
no.
not buying off the MLS. Okay, so you are.
So Tom, so what happens there? Just to add to that. So, or let me just add to that. So you're going into different markets, right? Not only in Dallas.
Correct. Yeah, we buy all over.
You're looking all over the country. So you're working with different brokers that have. So what type of asset are you buying right now? Are you buying like Dollar Generals? Are you buying, what type of assets? Because I saw on your website you guys have a Dollar General there, and you have,
Yeah. So our first fund and our current fund, I wanted to create something that I knew was going to be a win. And the first fund that we're doing is investment grade only tenants that are publicly traded, corporately backed leases. where we own the building and our tenants are CVS, Dollar General, AutoZone, Walmart, etc. So that's our first fund. The second fund in the next step will be an A-class multifamily fund. And then the question that Tom asked in terms of like pricing and returns, you just got to really seek the best deals out there. I think now's a really good time to buy. I think if you can buy an A-class deal, they're priced a lot lower than they were 12 to 18 months ago, and you can put some good debt on it that may not have a high prepayment penalty on it. Maybe put some bridge debt on it, and then if rates come down, which I think a lot of people think they will, then you would do a refinance and put a long-term note on it, and then just hold it. So that's what that model will look like. But obviously, institutional money wants to buy these A-class deals. They want to come in and do the same thing. So how do I separate myself from them? I think it's relational a lot. I made an offer on a deal last spring, and it was between me and two other bidders on the final three. And one of the bidders was BlackRock, and they ended up getting the deal. But how did I get there as somebody who doesn't own their own multifamily deal yet? And I think it was through relationship with the broker. I was pretty strong on my terms on my offer, outside of pricing, but like the terms were good. And then I had proof of funds, and I had a good team behind me to show that like, hey, we can do this. We may be the smaller, like bottom of the pack team in the league, but the top of the pack team, BlackRock, so it's just kind of like, how can you make the deal make sense for the broker? Because really the broker just wants to make sure that the deal gets closed. So
cool. I got a question on top of that, because you create a fund. Explain what that, I know what that means, but explain what that means, because like I said, you're creating the fund, but what exactly does that look like? Because you got to sell your ass off for people to believe in you. So explain a little bit what that is.
Yeah. So our funds are structured in a way where we have the fund. I'll back up. Investors put their money into the fund, different investors, and then the fund goes out and acquires different assets. So right now we have 7 assets in the fund. And if you're an investor in the fund, you have ownership in all 7 of those. So you have diversification. And then as more money comes into the fund through different investors, a couple $100K here, a few $100K here, $100K here, the fund will grow, and then we'll be able to acquire more assets, which will create more diversification for the upflow. So it kind of flows up, it flows down. So right now we have 7 assets, and hopefully by the end of the year, we'll have 25 or 30. And that'll be due to more investors coming in, hearing podcasts like this, hearing from other investors saying, hey, Zane's giving me 7% return. Hey, I just got 30% depreciation on my K1 last year, and a sheltered income over here. So it's like, just word of mouth, and then me getting out there and telling people. But the fund is structured in a way where money comes in, and then it's deployed to acquire more assets that cash flow upward to investors.
So if anyone obviously listening to this that's still playing, that wants to put their money somewhere into assets that are A-class, that are solid, obviously reach out to Zane, because this is one of the reasons why we have you on, as well as other individuals, because you're building your business every single day, and your background of hockey has allowed you to be honest with you, now have the intestinal fortitude to go out and start your own business, because it's not easy, man. You separated from an individual that was obviously very successful, and you're doing well in that realm, and now jumping in on your own, and now you have to raise money, which is one animal, and then you have to also find properties is another animal. So you have it's really 2 different businesses. Acquisition and funding are 2 different sides of it. So I just want to give you a plug there. If anyone obviously is listening to this, we've had, a number of NHL individuals on this podcast as well, and they may be listening to it, and they maybe have friends that want to invest as well. So that's another thing I want to make sure that we highlighted on this. Tom, keep going. Sorry about that. I didn't mean to interrupt you.
No, it's good. I mean, this is literally why we do it. Someone could hear this episode. I mean, we could, have conversations, off the air and stuff like that, to discuss, plans and visions and whatnot. So this is great. This is a great episode. A lot of takeaways. 9 months ago, I want to go back to that. That's when you started, essentially. You went out on your own, correct?
Yeah.
I got that right? Okay. So was this something that was in the works for a year, 6 months, a year in advance, and then officially a day dropped where you went out on your own? And what did that day look like? What was the first thing that you did? in order to get this thing up and running? Where did you start?
Yeah. So I think probably about a year ago, so maybe 4 months before I really made the decision to kind of start myself, I started to see things that, I was going a different way. I kind of had some different ideas on some things. And I was like, hey, maybe this isn't the place I'm going to be at forever. Let's start this next chapter. And we were also selling a property at my old company, and we weren't having any bites on it. And I was like, I'm going to start my own fund. And I told the president of the old company, I said, hey, do you mind if I start my own fund and I just buy this property? It's beneficial for you. It's beneficial for me. I like this property. So that was kind of like my way to get his blessing to start my own company, but also make it beneficial for him. And so that was really how I did it. I was just like, hey, like, I'm going to buy this property. It'll be beneficial for you. It'll also be beneficial to me. I want to start doing this myself. So I did that. That was back in probably, really, we bought the first property in September. And then I started to raise a little bit more money. And then I also acquired like the Allen Americans. And I don't know what he was thinking, but I think maybe he saw the growth that was taking place on my side. And I'm not sure if he liked it. So he basically said, hey, you got to pick one or the other. And I had been like thinking about it and praying about it for a while of like, hey, like, what should I do? Should I stay and be loyal to somebody who has helped me grow? Or should I kind of take this next step and do that? So I was really conflicted a little bit. But he kind of he said, hey, you got to pick one or the other. And I said, okay, that's an easy decision. I'm going to go do this thing myself. And there wasn't really any hard feelings either way, but it was just ready. So that's kind of how it came about.
So let's talk about building your team, right? You went out on your own, just to piggyback off of what Tom said. You went out on your own. Who was the first person you brought with you? Who was the second? Who was the third? And walk us through that process, because, like I said, when someone's listening to this, they want to say, all right, it's a scary move to make the jump and go on your own, but it's also scarier to do it yourself. So you had someone with you, and then talk a little bit about that and building the team and that side of it.
Sure. So I knew that the first thing I needed was a really good accountant. That's, in my opinion, the most important thing in business, especially when you're dealing with other people's money. You need somebody that knows what they're doing. So that was my first pickup. I hired a guy who has 40 years of accounting experience, maybe 35 to 40 years. He was basically retired, and he was actually the CFO at my old company, but he ended up leaving just for his own reasons. And he was kind of retired and just looking for something to do. And I said, hey, like, I would love for you to come in and help grow this. And he trusted me. I've known him for 25 years. He's known me since I was a kid. So he trusted me. I trusted him. He saw my potential, I think. And so that was the first pickup. The second one was my dad. He's been in marketing for 35 years in corporate. So he knows a ton about marketing. He knows a ton of ways to get more investors. So he's been an addition. And then the third one is an asset manager, and she's worked for me at my old company, and she's actually still working there, but working for me as well. So she did all the asset management for the 60 properties that we had over there, and she's still currently doing that. And she's just great at what she does, and she's a personal friend too. So the team right now is 4 people, and doesn't really need to be more than that currently. But as we grow to the multifamily stuff, we'll probably add a couple asset managers and just continue to grow. But
who's responsible for raising money on your team? Is that all you?
There's me, and then there's also somebody that's a small equity partner in this current fund. So fund specific that is raising money for me. Yeah. And they've been very successful in the past, and they raised $30 or $40 million in the past for me.
Not bad. That's pretty good. That's not
also, I mean, most of it is through me. Like, a lot of my connections are NHL players, NFL players, investing with that Zoyer Sports Group. They have a really good pool of investors, of doctors, NFL guys. So having that database is good. I'm a member at a country club here in Dallas. So a lot of it is just talking to people, telling them what you have. And, if they hear the value, they want to get in. If they don't hear it, then that's okay. Like, I'm not a guy who push my investments on people. Everybody, it's their money and they work hard for it, so they should do what they want. I just want to tell them, like, hey, this is what I have to offer, and this is why we like it. If you see the value, you can get in.
All right, let's talk about this though. So there was one side of it is saying, hey, so if you're asking me, and this is the way I think, and maybe other people think this way. One thing is raising the money, saying, hey, doctor, hey, NHL guy, hey, NFL guy, I could get you these returns. The other side is finding that asset that'll spit out those returns. So what did you do? Did you find assets first or found the money first? And what was your line of thinking there? Because there's a dance there.
Yeah, there's a dance there for sure. And right now it's a very hard time to raise equity. I will say that there's no deals turning, no deals selling, refinancing. So a lot of my investors who in the past would be like, hey, I just sold a deal and I made $300,000 on it. Where can I park it now? Mm-hmm. They don't have those deals cycling. So the fine line, the dance is typically the money comes in and then I acquire the assets, but like I have a pool of assets that like I'm like, hey, these are targeted assets that once money comes in, these are ones I would go for. I also have like a ton of brokers that know my criteria and they send me deals all the time. They're like, hey Zane, like, do you want this deal? We're about to bring it to market next week. You want first crack at it? And I get that because of my experience, A, with them, and B, like actually doing a transaction with them and saying, hey, I said that we were going to close in 60 days, but we closed in 45. And like just delivering on everything that I say. Brokers love that because most people don't deliver on what they say. So,
I love that because you got to look at that. And anyone looking to get into investing, there's a dance in what we do, right? There's lining up money, there's finding assets. Who manages all of your assets right now?
So I have that asset manager who works for me, who did all the stuff in my old company. And a lot of them, like, so the stuff we buy are triple net and double net, meaning we only have limited responsibilities on them, whether it be roof and structure, or, you know, we pay the taxes and get reimbursed from them from the tenant. We pay the insurance, get reimbursed from it. So on every deal, there's probably 6 or 7 things like that each deal has. And right now we only have 7 deals. So there's about 50 things throughout the year that you have to do. So right now it's not super work intensive, but as we grow to 20, 30 for the girl that's doing all that stuff, like it will get more difficult for her and we may have to bring more on. So but she's great at what she does. She's a stud.
Yeah, we do mostly commercial, or we do mostly residential, and it's a different model, right? So if Tom or myself or Adam is going to build, continue to build single family houses, there's a lot more challenges that you run into. Tenants bitching, you got, all that stuff. It's a lot different on a triple lease, what you're focusing on, which is very, very smart, and you need less people for that.
Yeah, exactly. And our tenants are multi-billion-dollar corporations, so we never have to chase rent. It comes to us before we even think about it. It's automated, and they typically don't whine about anything. The only thing they whine about is, hey, why didn't you get this information to us sooner? Maybe like, hey, we owe you this money. Couldn't you have told us sooner? But like, we typically get it to them fast. But yeah.
All right. So here's it could be a dumb question, right? Out of the blue question. Tom, you can tell me if it's a dumb question. But let's say there's a hockey player right now that says, Zane, I want to start a fund. Give 3 steps in what they need to do real quick. Just, get an attorney, get the right, walk through a quick process.
Step 1, get an attorney, have them write it all up, tell them what you want. Step 2, have a business plan of what you're going to do. Step 3, go find investors and do it. Really, the biggest thing is get it all papered up and make sure you're protected. And then secondly, know what you're going to do and have a very concise way to say what you're doing. And then thirdly, just start it. I mean, you could start a fund and buy 1 property in it, and it could technically be a fund, but really should be 2. But yeah, I mean, it's legal work. It's expensive, but
it is. And if anyone is looking to do that, do you mind if they reach out to you, Zane?
Yeah, sure. No, reach out. And then, like if anybody wants to invest too, like we're taking investors actively. We're raising $50 million this year for this fund. And then the second fund will probably be that multifamily fund will probably raise another 50 starting in Q3 or Q2 of this year. But all of my investors have to be accredited, meaning that they either have to have a net worth of $1 million or have made over $200,000 in the past 2 calendar years. But you can look that up online as well.
Nice. Perfect. And I also will put you in touch with one of my buddies that lives in your area that is actually doing something very similar. You guys may be able to work together, which you could. If you do, fantastic. It'll be a win-win situation. But I know we're coming to we're at 34 minutes. Tom, any last words? What do you got? You're still on mute, dude. You're still on mute. You haven't figured out the mute button.
I said last question in a nutshell. Great episode. Great information. Great content. How do you buy an ECHL team, and what does that structure look like in terms of returns? Because, I mean, I know you're probably buying it for the write-off or to say it's cool. So one or the other. So I want the details.
Yeah. So the way I bought it was
fucking making money. So
so the way I bought it was going to that Zoyer Sports Group and just being like, hey, how do you guys do this? I knew that they were for sale because the year prior I was talking to the coach and he Chad Costello, and he was like, yeah, we're looking to sell, blah, 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 blah. So I knew that they were for sale, kind of just from like knowing people. And then I told Zoyer, I was like, hey, I know they're for sale. They also knew that they were for sale because obviously they're in the market. But I talked to them. I was like, hey, what's the secret sauce? Because they've been very successful. And they basically said there's 3/3 of teams in the coast. A third of them make money, a third of them break even, and a third of them lose money. Their kind of secret sauce is taking a third from the bottom third that are losing money and then taking it to a top third that is making money. So Allen, the Americans lost a lot of money last year, and we think that we're either going to break even or turn a profit this year. And that's through ticket sales, through sponsorships, through decreasing expenses. It's all a bottom line business. And then there's multiple on that bottom line for investors. So we think it's going to be a 3 or 4x to investors in 3 to 5 years, which is very high appreciation. And that's why I need some real estate for depreciation to shelter my gains. But yeah, so it's really just getting butts and seats, more sponsorships, and decreasing expenses and creating. I've learned a lot this year just kind of being on the sideline, but we're not in the hockey business. We're not in the sports industry. We're in really the experience business and like creating a fun atmosphere and environment for families and fans to come is more important than winning games. Unfortunately, as players, we don't want to hear that, but it's a business. Sure. And everybody's there because it's their Friday night. And how are they going to spend their Friday night? They're going to they're going to want to do something that's fun. And us creating experience and a platform for them to have fun is what we're trying to do. And like I said, LJ and Miles have done a great job of doing that.
Awesome. Very nice, dude. Zane, if anyone wants to contact you, what's your best contact and how do they find you?
Sure. My email address, I'm sure maybe we can put it in the link or something, but it's just zane@freedomcre.net. Our website's freedomcre.net. And you can look me up on LinkedIn or really any social media and just reach out to me. I'd love to help any way I can. And yeah, I mean, I love what I do. I'm passionate about it. I love helping people and would love to be a resource to anybody.
Awesome. Zane, thank you very much. This was a kick-ass episode. We're very impressed, and we want to wish you the best of luck. Obviously, you have a lot of goals that you're setting, and hopefully you hit every single one of them, and good luck with it. If we could do anything for you, obviously along the way, you have all of our information. If you could just stay on this call after this, I want to grab all your information and put you in touch with my buddy Dwight. Tom Mealy, like always. Thank you, brother.
Thanks, guys.
Thanks, guys.